A very good evening to all of you. This is Business Today, your weekly business roundup brought to you exclusively on Channel I, and today is 13th of September 2017. Success is always interconnected with your own action. Successful people always move forward, irrespective of what comes along their way. They do make mistakes, but they do not quit. So keep moving till you reach your final goal. And with that in mind, we will start our show for tonight with Business Personality segment. Yes, today we have an investment advisor, a renowned banker, and an individual with in-depth knowledge in the field of finance joining us. So let's first have a look at the introduction to welcome our guest for tonight.
Mangala Boriegoda is a distinguished and a well-known veteran banker. Having commenced his career at Bank of Ceylon in 1970, he rapidly progressed to the positions of dealer and chief dealer, and included a 3-year stint as head of treasury of the bank's London branch. During this period he received intensive training at Lloyds Bank, London, Barclays Bank, London, Deutsche Bank, Frankfurt, the Chicago Board of Trade, the New York Exchange and the ANZ Bank. After 22 years at the bank, he moved to the private sector as General Manager Fixed Income Securities of Waldeck Mackenzie Limited, a member of the John Keells Group. Here he structured Sri Lanka's first ever commercial paper in 1993 for John Keells Holdings Limited, and Aitken Spence Limited, which were placed with Bank of Ceylon. He then proceeded to introduce many new debt instruments and hedging instruments to the local market. These included the country's first ever forward rate agreement, the first interest rate cap, floor and collar, which are interest rate hedging mechanisms, the first oil hedge, which was structured for John Keells, in the Singapore CIMEX in 2004, Treasury Bill-backed securities, and the innovative All-Share Price Index, OSPI, linked bull and bear commercial paper. Many of these instruments are popularly used today. In 1995, Mr. Mangala Boriegoda joined the team that set up Union Bank, and served as head of treasury. In 1997 he joined DFCC Bank as senior vice president, treasury. Then in 1999 he moved to Standard Chartered Bank, as head of global markets, rising to the topmost position, as chief executive officer of the bank in the year 2000. He was a member of the regional corporate strategic team that facilitated the subsequent merger between Standard Chartered Bank and Grindlays Bank. Mr. Boriegoda was also involved in setting up National Wealth Corporation, NatWealth, an investment bank under Mahapola Trust Fund, engaged in fee-based activities. He served as the managing director and chief executive officer of NatWealth during 2003 to 2005. In an illustrious career, Mr. Mangala Boriegoda has served as a consultant to the Asian Development Bank, the World Bank, the Central Bank of Sri Lanka, the Securities and Exchange Commission of Sri Lanka, as well as the Securities and Exchange Commission of Bangladesh. He was also mandated to develop the corporate debt market in Bangladesh and Pakistan. In 2005, Mr. Mangala Boriegoda set up his own consultancy outfit, Wealth Lanka Management Private Limited, of which he is the chairman. Wealth Lanka Management is today a much sought-after consultancy firm engaged in corporate planning and restructuring, treasury management and investment banking activities. He thereafter set up Wealth Trust Securities Limited, now a leading primary dealer, Safe Holdings Private Limited and Asset Trust Management Private Limited, a licensed investment manager. Mr. Boriegoda serves on the board of several quoted and non-quoted entities, including Cargill's Bank Limited, a past president Forex Club of Sri Lanka. Mr. Boriegoda is a much sought-after guest lecturer.
All right, and he is Mr. Mangala Boyagoda, Chairman of Wealth Lanka Management Private Limited, joining us. A very good evening to you.
Very good evening, Sandra.
Right, so you are a veteran banker and you have worked in cross-section of banks, state banks, private banks, development banks, foreign banks, all kinds of banks. How was your experience working in diversified banks?
Nisanga, I started my banking career in the Bank of Ceylon. I worked there for 22 years and I left. I have altogether 33 years experience. I think I learned my ABC, the Bank of Ceylon, banking, and I got a institute training on the treasury management, there, local and overseas. Then after I left Bank of Ceylon, I moved to the private sector banks. I think when you see the banking per se, I see the banks, all banks are focused in three business areas. One is corporate banking. That means your corporate clients and international trade, imports and exports. Second, consumer banking. Third, treasury. The difference between these banks, the size and the magnitude based on their risk appetite. Their business plans based on their risk appetite. Then they go for customers based on their business plan. When as a treasurer, I moved all banks. When end of the day, when I think, I always feel I'm missing something. Size. When I was a banker, I had big money. When you go outside, you don't get that. Yeah. Because today, even the banking, the two state-owned banks control 50% of the market.
Entire market.
Entire market, the banking market, yes.
Right. So you were appointed as the Chief Executive Officer of Standard Chartered Bank India 2000. Being a local, how was that experience of heading an international bank?
Now, if you are a CEO of any bank, you are responsible bottom line.
Yes.
And also compliance. And also operational issues. You are responsible for that. But in my case, it was a unique experience. Because at the time, I joined Standard Chartered Bank in 1999. Year 2000, Standard Chartered Bank acquired Greenlace business in the region. India, Pakistan, Bangladesh and Sri Lanka. This merger process took 2.5 to 3 years. So in that time, we were running two banks. So they appoint me as a CEO of Standard Chartered Bank to handle the merger. Okay. Right. When you're handling a merger, it's not bringing the two books, handling people. Because when the new entity, for every position, we got two people applying from two banks. We select the best and how we handle the rest. And so then the issue was handling people. So we got international consultants to come here to talk to the people, and also we went with a VRS scheme for the balance staff, and also the exit for some people. So that's I think that's the experience that I was handling, challenging experience that we got. Not like anybody. I have gone through the mill. Now I think I am familiar with the HR processes also in this country more than the treasury now.
Okay. So you started your career in 1970 with Bank of Ceylon.
Yes.
And how do you see the evolution of the banking industry and how different was banking industry then compared to now? As a young generation may not have any idea of how you have been handling the situations then.
Yes. 1970 when we joined, everything is manual. We put right debit and credit. Right. Also, all the ledgers, everything is handwritten. We have not seen a computer, right? Neither calculator, right? So at that time, the market condition, everything controlled. We have exchange control, and also import controls, and the export licenses, everything regulated. With the open economy, right? We have seen the opening of the bankings, and the foreign banks came to this country. With that, the exchange relaxation, controlled relaxation. Current account transactions being liberalized. That means goods and services, right? Imports, exports, as well as services, way of education, health, and travel. The exchange relaxed, and the banks got autonomy to quote their own rates.
Okay.
Right. So that's the difference that we from 70 to 77. Okay. After that, 1980s, we have seen the computerization era. All these manual ledgers, we brought it to the computer system.
In
1984. So because with the Sampath Bank,
Okay.
we have seen, they brought a lot of technology in the IT. So with that, all the other banks followed. Now it's a digital era. So the brick and mortar is gone. So you are using your handphone to do your business. I think we have to get ready to understand the reality and move along with that. That is what I see. That is the revolution that I see. Going forward, exciting things can happen.
Right. And you were also involved with many international projects. You were involved in capital market development projects in Pakistan and Bangladesh. So having that international exposure, how is the capital market in South Asian region compared to ours?
Yes, 2004, I got a World Bank project, right, to develop rules and regulations for Bangladesh debt market, right? And also 2 American lawyers worked with me on that project, the 10-month project. Now, if you realize, and also when I was in Standard Chartered Bank, I was the debt champion for the region. I was involved in Standard Chartered Bangladesh as well as Pakistan, involved in the developing the debt market. If you look at the capital market is not only the debt and equity. That's called the capital market. If you look at the region, I think you look at the India, the equity market is about 70% of the GDP. Their GDP is over $2,200 billion.
Okay.
Pakistan is about 32% of the GDP. Their GDP about 285 billion. Then the Bangladesh, I think, is less than 20% the equity market capitalization. Sri Lanka, our GDP is about $82 billion in 1960, but our capital market, our equity market capitalization is 23%.
Okay.
And our debt market is 3% of the GDP. India is about 19%. Enough room for us to develop this market. Because if you want the progress fast, I think these 2 markets has to be developed. So I think there are enough potential for these markets to grow.
Right. And you have introduced many debt instruments and hedging instruments to the local market. Can you talk about those initiatives?
I left Bank of Ceylon in 1992 and joined John Keith. The first task they gave me to come with a product to reduce their borrowing cost.
To reduce their borrowing cost. Okay.
So then, at that point, the bank intermediary cost, bank borrowing money and lending, so difference about 7%. Because the reason for that is high reserve cost. There's a 15% reserve. Every 100 rupees you take, you have to leave 15 rupees with central bank. On the other hand, if a corporate borrow from a bank, they have to pay a national defense levy. The cost is so much. So that's what's happened there. If you borrow from a bank, if you go to a bank must have deposits to lend. The deposits attract reserves. If you borrow, defense levy. Yes. What we did was, we thought, rather than borrowing from the bank, let the bank invest with us. We issued a paper called commercial paper. Bank bought the paper and sold to the investor. So the bank didn't have an asset or a liability, so we cut the margin. We shared the margin among all 3. Okay. That is the birth of a short-term debt market in this country. With that, most of the corporates came to this market. And also banks start giving lines for commercial paper, 1-year line on a 3-month rollover basis. So at that point, the treasury bill is the benchmark we used it. Then we decided, if they are borrowing against the benchmark is a treasury bill, the volatility of treasury bill is going to impact their cost. So we introduced forward rate agreements, interest rate swaps, caps, floors, all the derivative instruments to this market. So that is the birth of this, I think, what's happened because the innovation took place there.
Right, fantastic. And you were also instrumental in setting up National Wealth Corporation in 2003. Can you explain this concept and the benefits coming with it?
Once I finished once the merger, the Standard Chartered merger is over, I thought to myself, enough is enough, I must move out. Then I thought, I must share my experience with and do something for the country. At that time, 2002, I wrote a concept paper to the government saying to set up an investment bank because we had 2 development banks. By that time, 2 banks were privatized. So what we thought at that time that government is planning to they embark on the privatization program. But I thought, rather before privatizing, might as better to restructure these companies and go public to get the value. When this concept, the then Minister of Trade took this concept and called me and asked whether I can set up this under Mahapula. I thought it's a noble thing, because whatever money we earn goes to poor man's education. So then I left Untitled Chapter Bank and I set up National Wealth Corporation. So Mahapula gave us 200 million capital. So then, in the meantime, right then, at that point, we were managing the petroleum treasury. So, right, and also we did the first oil hedging with that company. Then the government gave us to restructure the CB debt to us. Then in the meantime, the government took the CW to public. Two banks went to court and took an injunction against the privatization because they owe so many billions of rupees to the bank. So we went we restructured that debt and came with the innovative ways to overcome that. So we had a lot of value. My idea was to be the investment bank. Within 9 months, we made 147 million rupees and we gave 100 million bonus shares to Mahapula. So then, 2005, I decided I must quit and start on my own, for obvious reasons.
Very inspiring, and we have come across many situations where companies face financial difficulties, and it is very important that they get proper consultations within or outside the organization to come out of those situations. And you were one of those individuals who have been giving successful repayment plans for companies to come out of those difficult situations. Can you share your experience working in those projects?
Now, I set up my company, consultancy company, in 2005, Srilanka Management. 2008, we have seen Srilanka Group had a problem. So few companies had a difficulty of repaying their. When a company have a liquidity issue, right, then what will happen? Your assets, if you can't realize, there'll be a crisis. So then one company came to us, Sriram, for a payment plan. So we did the payment plan. At that point, the total liability was 6 billion, 6,000 customers. We did the payment plan. I told them, we can manage, we can pay 60% of the money now, and if you can realize certain assets, we can pay 100%. We took this proposal to Supreme Court, and then Supreme Court to Central Bank, and Central Bank gave permission for us to implement this. So there, at the moment, I think 92% people got the 60% of the money. That's why I think that's the most successful payment plan. Right? If you can get the other asset, we can pay 100%. The lesson that we have to learn in this, in the event things like happen and a corporate has difficulty, there should be a mechanism to take over the assets and manage it. Otherwise, if the asset value goes down with the time, what will happen? It will be a problem. It will be difficult to settle the liabilities. Also, the investor's point.
Exactly. I was just going to come there.
Investor point, my advice, don't put your eggs into one basket. You must have a diversified investment. If you put everything, your hard-earned money, then you lose everything.
Right. And you are the chairman of Srilanka Management Private Limited. Can you explain the term wealth management? What exactly is wealth management?
Wealth management. I think, before the wealth management, I would like to talk about the wealth planning. To manage, there has to be a plan, no? Normally, we look at it. And youth coming out from university, first thing is what? They are looking for a job.
Right.
After that, they want to have a dream car. Then their marriage, their house. Then they go to their children's education, their higher education, their marriage, then your retirement. How many of us are planning? First, you must plan your future. Then only the asset allocations comes. Wealth management are there for. It's not just investing your money. You have to invest in money, the purpose, to understand the future inflation.
Right.
So that's the wealth management point.
Okay, in this context, What is the role of a wealth management company? How can, in which capacity could a wealth management company support the general public?
Now, if somebody comes, what we first find out, why he come, what do you want to do? What is his requirement? What is the risk appetite? So we get the information and we make a plan to suit their needs. That's important thing, because end of the day, no point of giving my plan. I have to plan your needs. That's what we are doing on the wealth management company.
Okay, so how is the demand for this sector in the local market?
I think it's very poor, because there's a reason for it. This country, I think we all know how to earn money, but we don't know how to invest, because our financial literacy is very poor. What we say in the country, we say our literacy rate is 90 to 95%. But in the global, now we are living in a global village. This reading and writing mean nothing. You need
have to go beyond.
IT literacy and financial literacy. If you have that, then you will know how to manage your funds. So when you are making an investment decision, there are three things you have to look at it. First, the credit risk. Second, the liquidity. Third is the return. So higher the risk, higher the return. If you can put into this basket, you can manage your funds easily on your own. Then how you measure your return?
How do you evaluate your credit risk?
It's a credit. Okay, that means there are rating agencies, right? You must understand what is credit risk. If you lend money to somebody, the repayment capacity of the borrower is called the credit risk. What is the liquidity? If you go for a long-term investment, after 2 years, if you need the money, can convert it to cash? That's called liquidity. Third is the return. How you measure the return? You have to measure the return against the inflation. For example, because we all believe in the dowry system. This country, we believe the dowry system. Right? So we have to understand, if you are investing money, investment must get a better return than the inflation. For example, we say you have 10,000 rupees today. You can buy a basket of goods or some goods. Without buying that, you invest this money. End of the year, we say you get about 6 to 7%. Inflation is 10%. What will happen? These basket goods will go by another 10%, but you have got only 6%. Your return. The balance, that means your purchasing power reduces.
Yes.
That's what's happening if you don't manage your funds properly, wisely. Because I see the biggest issue in this country. I think this is the time. I think we have to add this with our school curriculum. We have to bring this investment, this thing, at least our younger generation, to give us some sort of idea when they come out of the universities, to understand how to manage their finances.
Right, and also you are a director of Kagez Bank. Can you talk about the business model of Kagez Bank? Is it something like China Agricultural Bank?
We actually, when they invite me to join the board, I was delighted, because this bank wants to do agriculture and commercial bank. Because I think for our economic prosperity, the food security is a must. Right, so that I think Kagils was doing. Kagils was someone to support it. But look at our group. At the moment, they are looking after over 10,000 farmers.
Okay.
We are committed to this. Even now, we are moving towards that.
Right. Thank you very much for joining us. There's a whole heap of things to talk with you, but unfortunately, we got to wind up. Thank you very much for being with us. It was indeed lovely having you with us today.
Thank you.
Yes, with that, we will move on to a short commercial break, and we will be back with you soon. Welcome back to Business Today, and now it is time for us to check out as to what is going on in the Colombo Stock Exchange. Let's move on to the stock market segment. As usual, we have Shiraj Obesekara joining us from Colombo Stock Exchange to give a brief update on the stock market.
Good evening. Starting with the previous week, the indices continued the downward trend we have been experiencing in recent weeks with what was a shortened week of trading last week. The all share price index closed Friday at 6,391, declining by 0.3% during the week. The S&P SL 20 index closed Friday at 3,686, also declining by 0.1% during the week. When considering some year-to-date figures and how the indices have done so far in 2017, both indices have made encouraging returns, with the all share price index making a 2.32% gain year-to-date, and the S&P SL 20 index also recording a 4.54% gain year-to-date. Continuing to look at some yearly figures, and I've mentioned this on the show previously as well, foreign investment certainly has been a highlight. The year so far has experienced Rs 81 billion in foreign purchases, already exceeding the full year figure for 2016 with a few months to go. The net foreign flow is also encouraging at Rs 27.6 billion in the secondary market. In other stock market related news, the continuation of the tax exemption offered to gains made through share transactions under the new Inland Revenue Act is also certainly worth noticing. The series of investor days organized focusing on local investors around the country by the Stock Exchange and the SEC made a stop in Kandy over the weekend. We did see a fair amount of interest in the Hill Capital, with over 300 eager participants turning up to learn about the stock market and stock market opportunities. The fifth event in the series will be held in Galle on the 30th of this month. So far, we've conducted events in Negombo, Colombo, Jaffna, and now in Kandy, and we must say that all the events have been well received by the locals in the respective area. So, more information on the more information on the event in Galle coming up on the 30th of this month could be obtained from the CSE website. Moving on to foreign investors again, and a marketing initiative that we are conducting in that regard. The Invest Sri Lanka Forum in New York was announced today and is to be held on the 16th of October at the Sofitel Hotel, New York. The event is organized by the CSE and the SEC in partnership with stockbroking firms. The 2014 forum held in New York was well received, and the US is a fund hub and a significant contributor to foreign investments in the Sri Lankan stock market. Therefore, this forum will reach out to investors from the US and pitch the Sri Lankan capital market at large as an investment destination. The keynote speaker for the event would be the Governor of the Central Bank, Dr. Indrajit Kumaraswamy, and the event would also feature presentations by the CSE Chairman, CSE CEO, the Director General of the SEC, and a foreign fund manager on the experience of investing in Sri Lankan equities. Over 10 listed companies are expected to participate at the event. And I would like to wind up with that news and also briefly mention the fact that all our branch programs and all educational programs are shared on the website. So any interested parties who are interested in attending the forum and learning more about the stock market could attend one of those programs. All information could be obtained to www.cse.lk. Thank you and have a good night.
Right. Thank you, Shiraj, for the update. And with that, we are ready to move on to our final segment for today. And we hope to get into a discussion on banking sector, which is known as the heartbeat of the country's financial sector. And we have with us Nimesha Jayakodi from Frontier Research joining us. A very good evening to you, Nimesha.
Good evening.
Okay, first of all, can you talk about how the interest rates have been fluctuating during the past couple of months?
Yes, starting from around 2013 up until the end of 2015, the interest rates in Sri Lanka were falling. To counter this and to along with that reduce the level of credit available in the market, the central bank started taking some measures during the latter part of 2015, after which of course the interest rates started to increase. Stemming from all of this, right now we are also operating in a market or an environment with relatively higher bank interest rates than when we started this year.
Okay, if you look at the lending side of it, how did the loans perform during the last quarter, and any specific categories of loans you want to talk about?
Yes, so as a result of some of the measures taken by the central bank, we are, with somewhat of a lag, we are now seeing signs of private sector credit growth slowing down. In line with that, during the most recent quarter, the total loan growth of local private banks also slowed down. That is the period from April to June compared to the previous 3 quarters. Another point which the banks themselves has pointed out as a reason for this slowdown in loan growth is that they are more selective about the loans that they give. As you know, there is a certain set of criteria the banks actually look at when someone comes to them asking for funds. Right now they are looking at these criteria a bit more strictly, and the filtering out process a little tighter to, as much as possible, reduce the probability of someone being on their loan books who's more likely than not to default on the loan payments. To answer the second part of your question about the specific loan categories. Yes, there is quite a bit of talk in town of a potential real estate bubble. Bank funding is of course a key part of these projects when it comes to their funding activities, starting from housing complexes, the apartments, as well as the usual home building activities. During a recent presentation by Fitch Ratings also, they mentioned that construction is the single largest sector that Sri Lankan banks are exposed to. So much so that by around the end of 2016, this was 17.5% of total bank lending. The exposure to real estate is also a very common question raised by people at banking forums. By simply looking at their quarterly financial statements only, it's a little difficult to give a view as to how the lending to construction sector has moved. The reason being that although there is a separate segment called housing loans, the construction related loans can also be actually included in broader loan categories such as term loans. So it's difficult to see exactly where these loans are included. Amidst all these concerns, however, the central bank had mentioned that they are very closely monitoring the level of lending given by banks to the construction sector. As the second category, I would like to touch upon the leasing category of the banks. So coming from a direction during the last budget in November 2016, the central bank took some measures to tighten the level of maximum loan to value ratios, which means basically that banks and other financial institutions can't lend as much as they used to for things like vehicle leasing. We are still seeing some growth in this sector, but
do we actually see a growth in the leasing?
Yes, there is somewhat of a growth, but at a much lower rate than it used to be.
Right. At the same time, it is very important that we talk about the repayment ability of the facilities granted. How healthy are the loan books? Are we getting repayments regularly?
Yes, when talking about the health of a loan book, we actually look at an indicator called the NPL ratio, or the non-performing loans ratio. So a non-performing loan is simply when a borrower has been unable to make the interest payments or pay the principal amount for a certain bit of time. So lower the ratio, better it is for a bank. In fact, for some time, for the past few years, we saw the NPL ratios declining, which was a positive for the bank. One of the key reasons was the gradual decline in pawning facilities that the banks were giving, starting from around 2014. Originally, this was at one point a high source of high NPLs, the pawning facilities. The effects of this scenario is now gradually going away. So during the last quarter, most of the banks had recorded higher NPL ratios. Another key reason pointed out by the banks themselves as a reason for the higher NPLs last quarter was the droughts and the floods that actually affected Sri Lanka. Yes. So a lot of people were affected, and it became increasingly difficult for them to pay back the loans. So it naturally went on to creating higher NPLs for the banks.
Okay, and can you talk about the profitability of this sector during the last quarter?
Yes, so the core income source for a bank is its interest income. During the last quarter, most of the banks were able to actually move up their net interest margins. Net interest margins is simply the interest that they actually receive on their lendings minus the interest that they have to pay on the deposits. So a lot of banks had improved their net interest margins. On the cost side of it, the total operating cost of the banks had only increased marginally during the last quarter. And in terms of employee costs, it has actually come down along with the proportion of the taxes that they had to pay. So all these movements have worked positively for the banks last quarter, and they were able to actually record a higher profit overall compared to the previous quarter.
You mean to say the borrowing costs did not increase, though the lending costs increased in the banking sector?
Yes, they had been able to actually balance these out and to have the spread like enough spread to actually keep the profitability going.
Right, that's nice to hear. And in terms of strategic plans for future, any comments from the banks as to how they hope to move forward and grow their books?
Yes, there have been a few strategies that the banks have been talking about during the past few quarters and the last year. So one of the things a lot of banks are focusing on now is like technology improvements and automation. They are trying as much as possible to introduce a lot of technology improvements to reduce the amount of time that the people would spend in a branch near the counters. So this is to basically make it more convenient for the customers coming to a bank and possibly in the long run to reduce the operating costs for a bank.
Okay, and there have been regulations imposed recently on this sector. So how have these regulations affected the entire industry?
Well, so one of the most recent regulations that the banks now have to adhere to are the Basel III Requirements, an international regulatory framework for banks, which specifies the minimum amount of capital that the banks can hold based on a certain set of criteria. As part of the first stage of these regulations, the banks had to actually meet the first hurdle date was the 1st of July this year. So at that point, looking at the financial statements, all the banks had been able to meet these regulatory requirements. The next stage of it comes on the 1st of January 2018, and by that time we see that quite a number of banks will have to raise more capital, and they will have to do so very competitively because they are in fact looking at the same pool of funds in the market.
Right, any new products being introduced to the market recently?
Yes, a lot of banks are trying and focusing on increasing the level of savings deposits that they hold as opposed to the fixed deposits, because naturally the savings deposit carry the lower interest rates. So in line with that, some of the banks have been introducing these new savings schemes to entice the public, especially focusing on women.
Okay, and my final question to you is, what is your view on how the banking sector will perform in the medium term?
So to understand how the banks will perform, one thing we need to actually look at is how the interest rates are moving in the market. So what we see is from around April 2017, the market rates had actually been kind of falling. Like the treasury bill rates. So it is Frontier Research's view that these rates will continue to fall for another 6 to 9 months, but then pick up again. So generally what happens is the market interest rates translate to the bank rates, where the bank rates start moving the similar direction rather after a bit of a lag. So there's still a window in the short term for the banks to profit from higher net interest margin. Even in the medium term, if the banks are able to balance their deposits, loans in a kind of a good way, they will be able to maintain healthy interest margins. Also, one concern that we can see in the sector is the uneasiness with the higher net NPL ratios, like I mentioned before. So this is something the banks will really have to look into. And also we shouldn't completely disregard the possibility of a real estate bubble at some point in the future, which can affect the banking industry. to sum it up, overall my view is that the banks will continue to perform moderately well in the end of the year and even into 2018. But this performance will have to be driven very carefully, looking at the longer term perspective. Because if the banks, which are one of the most connected sectors in the economy, kind of show signs of weakening, a lot of other industries will also start to feel this very soon.
Right. Thank you very much, Nimesha, for joining us today. It was nice having you with us.
Thank you.
Right. With that, we got to wind up for today. Thank you very much for being with us. We will see you next time, same time on Channel I. Have a pleasant week. Good night.